Good afternoon, and we're back for our next session of the day, and probably one of the most important ones. The financial markets trading technology landscape has seen some significant shifts in the past couple of years, fueled by growing interest from financial institutions. Crypto and digital assets have continued to grow. The last year has also seen several major mergers and acquisitions among technology firms. Please welcome our moderator, Elina Pedersen, co-CEO and CRO of your Bourse. Elina, the floor is yours.
Thank you very much. So I think people here really need no introduction, but it would be great if each one of you could just spend a few words about what you're doing and about a short introduction about yourself, please.
Sure. Hi, my name is Tajinder. I'm the Group CEO of Invasia. We own about 12 brands in fintech and financial services across the world, along with some other, non-financial businesses as well. That's 1 minute.
Brilliant. Thank you. Chris?
Hello, everyone. Thank you for having me on this panel. My name is Christoforos Theodoulou. I'm the head of global business and sales at MetaQuotes. I've been with MetaQuotes for more than 8 years. And there I'm overlooking the sales team and also helping the global business development of the company to enter new markets and also help our clients, our brokers, and other financial institutions to succeed with our offerings. Thank you.
Alex?
Hello, my name is Alexey Kutsenko. I'm CEO and founder of Tools for Brokers company. We are a technology provider and provide all range of technology solutions for forex brokerage companies, hedge funds, and other companies who are interested in such kind of tech.
Vitaly.
Good afternoon. My name is Vitaly. I'm SVP of Sales at DevExperts. This year we celebrate 20 years, and we are the software provider. We develop trading platforms.
Ben.
Hello, Ben Cuthbert, CEO of Seller. We're a SaaS institutional platform for banks and bigger brokers. We provide pretty much a global reach, east to west, but specializing in larger banks. So.
Okay, fantastic. So the first question I'd like to ask you, gentlemen, is regards the multi-asset that has become a standard in our industry. So back in 2000s, brokers would have 40 instruments, 40 FX pairs, and that was enough. Now, nowadays, traders expect brokers to have thousands and thousands of instruments, including instruments derived from spot crypto. So how do you cope with that demand? Tajinder, maybe you could start?
Sure. I think the world is, we have a lot of instruments today that did not exist 15 years ago, 10 years ago, and the client has a lot more demands that he had before because they weren't as educated. So I believe, the platforms have to evolve where they can support multi-assets, they can support not just what the client wants to trade, but also simplify that somehow and make it easier for them to understand and invest into it. Finance and money is one of the most emotional subject for an average person because he spends 75% of his waking hours earning money. So when you're providing him a platform where he's going to put that money and transact and do something with it, he has a lot of emotions involved, and that's why the greed and fear of Wall Street comes into picture. So I think that's where platforms have to evolve. They have to be multi-assets going forward, and assets will have different meanings in 5 years from now than what they have today.
Okay, yeah. A lot of traders also use algos and robots for their trading, so it's not just manual trading as it used to be. So Chris, how do you cope with it? How do you respond to that demand?
Yes, actually, algo trading is one of the key strong points of the MetaTrader trading platforms, especially for the MetaTrader 5. We saw a huge increase of algo traders developing their own expert advisors, also known as EAs. We saw a lot of more algos being uploaded on our app store and made available for the traders. So what they're doing, they're leveraging the technology of MetaTrader 5 to be able to develop them and also to backtest them. We also give them the possibility to rent processing power through the MQL5 cloud network so they can do faster backtesting if they want to backtest multiple financial instruments at the same time and get results much faster. And at the same time, we also offer them the possibility to run them on VPS as well for uninterrupted operations and better connectivity and less latency with the broker of their choice.
Okay, yeah, so they must be happy, algo traders. So, Alex, obviously multi-asset requires different trading logic for different classes, right? So how do you cope with that as a technology firm?
Like when it comes to connectivity with liquidity, we of course work with all this kind of technology and all this kind of assets, because you are right that like 10 years ago Forex was enough. Now our clients ask for all kind of assets and we have to handle with that. So like one instruments are easy to implement and to connect to the trading platform like MT4, MT5. One is much more complicated, and what we are trying to do in Tools for Brokers, we're trying to all the time learn new kind of instruments like crypto futures, all kind of the things to understand how we could like to link new markets to traditional trading platforms like MT4 and MT5, again, because a lot of brokers use that. So it's just a process of learning all the time of the new instruments and what we need to do. So because requests all the time is coming and we see new interest of the traders as well, because traders nowadays not only want to trade Forex, they want to have ability to trade on all kind of instruments, just because they want to have different ways to operate, because some days crypto is coming up and they want to trade crypto, some days they want to go to more common instruments and such that. So of course as technology provider we have to keep eye all the time on all new instruments and be in the first place and offer clients all the new technology we could.
Okay, fantastic. So in general, like those multi-asset classes as well, they involve a lot of trade data, market data, customer behavioral data, right? And it has to be stored, analyzed, processed. So in general, how do you cope with that, Vitaly, and what do you offer to your clients in that sense?
Right, so the trading itself and the analysis of the data are actually two different tasks. So I would suggest brokers to look for providers that do their thing the best. So that develop trading platforms or that allows to analyze the data. And to be honest, for data analysis, it's enough to use some like known technology for like cubes, for data mining. But the trading platform in turn needs to have those points, data points that need to be collected, like starting from the registration of the account and then their customer behavior, how they trade, what are the other types they do, how frequent they lose or win, etc. So if the trading platform supports these data points to be collected, then you can use any software to analyze.
Okay, fair enough. I know that big data mining comes at the cost. So how do you keep the cost reasonable?
I'd say it's more data lake versus warehouse. To keep the cost, you're always changing your data, right? So what you see now with a bid offer and a price and a little bit of a field is going to change tomorrow. So if you look at it from a perspective of storing a warehouse or a data lake and then building a warehouse on top of it, you should be able to change your warehouse constantly, which makes you adaptive. So if your technology doesn't adapt to that and you can't rebuild these, let's call it quasi-material views of data, then you're going to be obsolete. So personally, I think you're going to have to adapt into that sort of model, and that means warehousing a lot of data, storing it, compressing it, and then extracting it into smaller bits of data or subsets that you can use to analyze.
Okay. Chris, I think MetaQuotes is also doing quite a lot regarding big data mining and slicing, right?
Actually, there's a lot of data that is going through the platform that is accessible for each broker by themselves. So we try to provide solutions that is going to help them make use of this data in an easy to understand way and in a usable way to gain out of them. For an example, we have extended the possibility to synchronize the databases of MetaTrader 5 with external databases such as Oracle, SQL databases, and other types of databases. We made it also possible to synchronize specific folders of the MetaTrader servers with external folders of other databases to be fully in sync. We have worked regarding the control of the market data to be able to receive market data from specific data providers or exchanges, and to be able to distribute this market data to the clients, whether it's going to be level 1 market data or level 2 market data with depth of market and also order book or even delayed market data. And we give also the possibility for the brokers on MetaTrader 5 to be able to allow the traders to subscribe to this market data and take this subscription fee straight from the balance of the account. So they have full control over this. Now, regarding the behavioral data of the traders, we wrote a separate system. It's called Fintech Analytics. We launched it from before, but we have optimized it to be able to track more information about what is happening in the terminals, in the MetaTrader 5 terminals of the traders. So now the brokers are able not to analyze just their website, their visitors from where they're coming to make their conversion funnels for their sales, but at the same time they can analyze what's happening inside the terminals of the traders. They can see, for an example, if a trader downloaded the application, if they installed the application, when they started trading, if they opened the charts, if they started using algo trading, if they started using copy trading, what device they are using, what's their screen resolution, and all of that data is then analyzed, is reported nicely on a nice interface on the web, and because it's deeply integrated with MetaTrader 5, they can generate reports with meaningful results for the stakeholders of the companies, allowing them to make better decisions.
Okay, great. So this is for the brokers to analyze their traders, right? But Alexei, what do you do as an execution technology provider to allow brokers to...
Yeah, when we speak about connectivity and liquidity, brokers all the time need to understand what the quality of liquidity they have. And when it comes to analyzing like thousands of instruments which comes from different liquidity providers, it's really big data because it's millions and millions lines of data in database every single hour. So in this case, we provide like a technology which allows brokers to understand the quality of the execution, what stream they have, how it compared with the real execution, compared with the market data they receive, because sometimes it's different and so on. So they will be able to see all this data using our technology. And also I want to point one more thing, that when it comes to execution, we have to keep in mind the regulatory reporting things, because sometimes some regulatory reports, to make it, you need some kind of data, because regulators could ask you to provide like a statement of the market depth of the liquidity at the moment of the execution for every single trade for some period of time. So you need to keep this data, and keeping such amount of data in real time to save it, it's pretty hard task to do it by their side, by themselves, by the brokers. So in our technology, we provide all kind of things for them to keep this data and to be able to create this regulatory reporting for their proposals.
Okay. Is there anyone who wants to add something on the matter of big data? Ben, maybe?
Yeah, I mean, I think there's another alternative to that, which is if you're storing every bit of line of data, you're eventually going to run out of disk, or you're going to be paying tens of thousands per disks, right, that you never need. An alternative solution would be to store the raw data, overlaying your spread or your adjustments to those prices on top of it. Therefore, you're reducing your overall compression of what you're storing, and you're only laying a spread at that point in time, because you knew it would be that. Other than storing 40 petabytes of data every second, and you end up running out of space. So
is that what you do at Seller?
something similar. Yes.
Okay, fair enough. So, Tajinder, you have mentioned that trade platforms are getting more simplified, right? Yeah. And in general, there is a trend in the industry towards gamification and simplification, and you can see that there's dozens of very successful brokers who do that. So do you think it's the new trend that will stay with us, or is it something that it's just going to pass, you know, and traders are going to get more sophisticated in that regards?
I think gamification has been there for a very long time in all different, phases. Whether it is good or bad for, investors, let's say, for example, it's very good for brokers because it generates volume, it generates engagement. But is it going to be good for the traders? Is it going to be good for investors? That's a very it's a difficult question to answer, because the more we know statistically. Simplistically and statistically, every trader, when he makes a trade, the probability of making profit is 50%, right? Mm-hmm. You add slippages to it, you add commissions to it, you add all those things to it, the probability of making profit is maybe 20%. Now, if he's trading more because of gamification and he does 2 trades instead of 1, his probability of making a profit goes from 20% to 16, then from 16 to 8.5. So whether it's good or bad, it's a very different question, because it also generates education for the trader. So it has both sides to it. But if we look back long enough into the history of how the different instruments have evolved, there are a lot of like, for example, Lexi was mentioning, the price feeds. Price feeds are very easy for linear instruments, futures, stocks, cryptos. What about options? What about knock-in options, knockout options? What about non-linear gamma trading, correlation trading? So the market is very large when we look at it from both institutional and retail standpoint. And I think gamification is good for an education standpoint, but there has to be a stop gamification and engagement for the longevity of the investor.
Okay, so would you say that some asset classes are more gamifiable than the othis?
I would say it depends upon who are the participants. If the participants is more millennial, they love to play, the surfboards on their phone, they would be more attracted towards it. But I think it's a cycle. This is not the first time we've seen gamification taking the center stage.
Okay. Chris, do you have anything to add to it? Do you think it's 2 different segments, or is it just millennials will have to grow up at some point?
My opinion about the gamification in the trading and in the trading apps is that companies are looking for more ways to adapt to DEPs. This is what is known digital engagement processes. They're trying to kind of engage through different means, like gaming-like features in the trading apps, like give rewards or bonuses, or have like a leaderboard. So some trading technologies, they have this already, one way or another. Now, it depends on which extent they're planning to take this. My opinion is that there is some trend towards it, but I don't know up to which extent this is going to be allowed or is going to be headed to. Even in the most simple form, we even have some type of this in our technology as well, but it's pure for educational purposes. For an example, in the MetaTrader 5 client terminal, we have like an achievements tab, which allows the trader to see and understand which level he reached in terms of using the charts, or using an algo, or using the MQL5 community to check different articles or signals. So all of this add up to the user experience in a way. So yeah, this is my view.
Sure.
I think another one point is, when you talk about, getting all this data, it helps a lot to understand your user, what he's doing, what he really wants on the platform. It's like creating a simple platform on the front, but on the back, you're doing all these analysis using gamification and getting more data about the user, so you serve him right in that respect.
That's a really good point. Vitaly, so since brokers are the ones who often go that way and order that gamification, simplification, and these are your clients, so what have you seen is how do you respond to that need of the brokers?
Right, so I would actually separate simplification and gamification. These are 2 great points to discuss, and if you let, I'll give a couple of theses for both. So simplification, it's like selling dime novels and selling some like real scientific studies. So definitely you will have significantly bigger client base if you sell simplified investment interface, but there will be always people who will request more tools, more trading analysis tools, more sophisticated order types, and more asset classes to trade, more sophisticated asset classes, derivatives, options. So, and it's not exactly about the how old the trader is. It's more about how what's the level of passion to trading in general. Yes, elder people more frequently go to the charge. So older traders who stay in this market, they will require more advanced tools. However, I think that even with simpler investment apps, people can be successful in investment. They don't use sophisticated order types, but they still can make money if they just wait. So it's about timing. So this is about the simplification. I think trading platforms must support both types of traders. Now about the gamification, well, it depends on what you put in this term. Like if it's casino-style trading, well, yeah, I can agree it may be prohibited at some point. If it's social features and what is more important when you share your balance or your trading history, well, we need to be accurate here. So for some people, it may motivate, and for some, it may make them standing out of this, right? However, what definitely works, and we proved that with our platform, is the personal dashboard. So when people can see the results of their trades and some statistics and the trading history with some free text notes or maybe tags, this is what works. I can tell it myself as a trader using our platform.
So it increases volumes and trading, right? Or
yeah, so you just see what did you do and how going across the history.
Oh, okay,
so
okay.
it's not just P&L of each trade. It's why you entered the market at that point and why you exited it. So this type of gamification, if we can call it gamification, it really works. And another good example is when you offer the existing user more tools. So you introduce some market analysis things or new asset classes. It also works.
okay. So Alexei, as a connectivity provider, does it make any difference for you if it's a sophisticated platform or if it's more of a gamifying or simplified platform?
Like as long as we more work with server-side solution and we provided interfaces for brokerage companies, not for the retail clients, gamification is something we're not related to, just because what reason to make gamification of the interface for the bridge, for example. But when it comes to simplification of costs, we see the trend that even employees of brokerage companies, they don't want to work with the complex systems. They want to see everything they do on the one single page with all the results. They want highlighting of what important right now. They want notes if something goes wrong and etc. So of course they want simplified interface and ask for that, because I know some cases in the industry when clients changed their technology provider just because the interface and the technology was too complex to understand, to work with it, to get the results. So yes, all the time, because it's nature of the humans. We all want to do everything easy, so we don't want to do anything hard. That's it.
Fair enough. So speaking of innovation, right? We've seen many industries in the past 10 years have all moved into cloud. You name it, Amazon Cloud, Google Cloud, Azure. But if we look at the financial industry, and it doesn't matter if we look at the traditional FX or any other industry within the financial field, we still all sit in the good old Equinix data centers. Ben, why do you think it's happening? What are the roadblocks and why haven't we moved to cloud?
Speed. I mean, if you're a traditional player, you're a bigger player, it's about the co-location, how close you can get. So it's market making. Let's face it, all of them are doing that. One, Equinix has a franchise that the entire world is in it. It's not to say cloud's not adapting. We have clients that are now, they're mainly on the crypto side because they've moved into Google Compute. It has its uses, but I don't think there's any difference in it. Really. I mean, you can connect from Google into Equinix same way. You're going to take a hit, for the latency that you go on. You'll get the upside of being able to deliver a faster service. Pros and cons, I think almost it's right tool for right job.
So what are the main benefits you think that if we all moved into cloud?
Yeah, you're going to have to move some behemoths though. I mean, I'm sure you can trot down the road and get the CME to move their entire thing to Google. If they do that, then that'll be the catalyst for the rest of the world. But I think it's evolving. People are moving. I mean, we do partly half of our stuff in Google because it's efficient, it's quick, we can spin up, but Equinix still plays a huge role in what we do.
So do you use it mostly for your internal infrastructure, or is it
mainly for infrastructure, logging, some production, analytics, data crunching? It's pretty good. It's fast. It's fast enough for us to store on. So yeah.
Okay. So, Alexei, what would you say is the main disadvantage? Just the latency, or?
Like, I don't say there's the main disadvantages, but when you choose a technology, you always should take in mind for what reason you do that. So I don't think that you always should choose dedicated service or you choose cloud, because it's all depends on what you are looking for. Because with cloud, it's much easier in terms of scalability. So you don't need to care about access. Is it accessible for different cities in the world, and etc. So when you work with dedicated service, you always have to keep in mind the routers, latency, and all this kind of things. So and in our work, our clients, we have different of them. Some of them ask for cloud solution, and we offer them solution based on the cloud. Some of them want to control everything, as they told us, okay, guys, we don't need anything related to cloud. We want this server to be in our data rack, and we want to control everything. So it's all about what you're looking for and for what purposes you do that. So that's it. Okay. So both technologies have some pluses and some minuses, but it's only related of your proposals, not about absolute minuses or pluses.
I'd always second, sorry, just quickly jump in.
Go ahead.
The reason also Equinix has been successful is the fact that it's bomb-proof. I mean, you could take out the whole world. Google has known to knock out zones. So there is that worry. If you're running a big business and your whole business is based on that service being up, yes, you can scale, agree with that. But when have you ever seen Equinix knock out? I mean, that's a big question. I mean, it's almost military grade.
But what if there's an earthquake? There is always a risk, right?
If there's an earthquake, we're all screwed.
In LD4,
frankly.
yeah.
That's another. I'm sure you have that in your SLAs. It's called force majeure, and they've got contracts, and we're all out of it.
Yeah, true.
So the simple answer is make a DR site and use 2 different providers. That's it.
Fair enough. So,
sorry, I just want to add something to this. From my experience, what I see is that financial institutions, they want to be located where the other financial institutions are located. They want to be collocated there. They want to make sure that they get the best connectivity, cross connection, direct connection. They want to make sure that they get the least possible latency. Because from my personal experience, I had a case where they decided to host it on the cloud at the time. They went live, and then after a few months, they told me, listen, we didn't choose an Equinix data center. We chose to host it on the cloud, but we found out that we were being arbitraged. They have been arbitraged by traders using algos, using low latency arbitrage strategies, comparing the prices between brokers, and they took the advantage, and so on. So sometimes, my opinion is that it's better to host where the other financial institutions are located. Your data feed vendor, your liquidity provider, your other partners. And I think the acceleration for a move to the cloud is going to happen when the financial institutions are going to be leveraging the cloud for their trading technologies as well, dedicated. I know most of them, they offer also a cloud solution, but when you put them side by side, even themselves, they admit that there is more latency on the cloud solution.
Okay.
Okay.
Yeah, fair enough. So Tajinder, I think you can give us really the
Yeah.
broker's perspective as well, right?
Yeah, for sure. I mean, we also run a couple of brokerages within the group. You're right in terms of being co-located, so people aren't taking, benefit of, latencies and things like that. However, I think, for example, cryptos, it's a distributed ledger. It has centers wherever there's a node for crypto is. So it's really what is happening today in the traditional businesses. I remember back in the days, 2005, we used to do arbitrage and ETF on, New York Stock Exchange. And there was always someone who's getting even faster, So, I mean, at the end of the day, it's the electronic message that can only travel as fast as the speed of light. So you're trying to be closer to it, but with the new instruments and the new type of investments coming in, I think some of those things will start to change. And then it's one thing is execution. The other thing is, for example, personalization, analysis of data, providing, tools for doing, certain AI stuff, things like that, which is not latency sensitive to execution, could be on the cloud. So it's a hybrid model.
Okay, so if we speak about cryptos, right, if we still look at the technology, they are a lot more latency tolerant than we are in the traditional market. So do you think that would develop into being more?
It would be, if you look back at, let's say, Forex as an industry, or even stock market as an industry, if I go back to 1980s, we were having brokers run across to the exchange and put the paper over there. So I guess everything is going to get faster. Even cryptos will get faster, they are evolving. People want to see things happen fast and fast and fast. Whether or not we are latency sensitive for a given, thing today should not impact how we look at the future of how the infrastructure should be. I believe hybrid model is probably going to be the more resilient model in the near future than basically being a centralized, I own the data center, I put my own servers. We do that. We have our own data centers. But I believe the shift is going to be more balanced approach.
Okay, fair enough. So my last question is more philosophical, I'd say. So Google has been working hard towards replacing developers, and making sure that AI can code. So do you think that all of our businesses will be replaced with artificial intelligence at some point, and brokers will just use those artificial intelligence to code whatever they need? Or are we still going to be in the business in the coming 15 years, 20 years, I hope?
If you think every car on the street is going to be a self-driven car, every food on your table is going to be self-cooked food, if you think robots will be taking pictures over there instead of humans, then it might happen. I don't think that's going to happen.
Okay, thank you. Ben, what do you think?
I'm probably going to put one out. I mean, AI is in like multiple forms. Computers aren't conscious, right? So it was always that theory, what is it to be a bat? It sounds stupid, but a computer can't answer that question, right? So will it get to it? Probably. I think it's, in this sort of terminology, it's separated into two forms, weak AI, strong AI. Weak AI, basically subroutines. We do weak AI. It's basically like an auto skew, an auto threshold, auto panic. It's adapting to routines you programmed. Strong AI is the next evolution of that, but is it going to be here and replace us? Going back to complex products, are you going to tell me that a computer is going to trade an option against someone? I don't think so. There's multi-factors that come into that. It's not just trading of the option, it's the creditworthiness of the person you're doing, whether he's hitting you on the right side. So, I'm not saying it won't come, but I think it's just broken into that typical, the topic goes to the machine, the theorized book.
Yeah, so tell us about the uncontrollable code, please.
Yeah, I think everyone has that, though. I mean, no one sitting in technology or software can say they have perfect tech. You're always trying to get rid of those fragments of code that break everything or spiral out of control. Look when COVID happened. Loads of people started firing orders left, right, and center, and we all started knowing what the hell's going on. It's just a glorified version of testing better. Automating, using a robot to test, taking humans out. We try and take humans out as much as possible because they just make, humans make errors.
So AI will test, right?
That's the weak versus strong, though. We're not talking agree. It's not like a robot standing there and he's going to do it. I just can't see that happening. This isn't a Will Smith movie with a, iRobot running around sort of thing. But
Okay.
that's my view.
Plus, I think there's also this conscious, okay, computers, you tell them this is what you do, you put a logic over there, and you hope that, the logic is right in all scenarios. You need humans to say, this logic is wrong, and I'm going to disagree with it. So that's where the conscious comes in, that's where it makes it more human.
Okay, I see Alexei has been smiling all the way along, please.
Just because I'm a coder myself in the past, and like when it comes to those kind of things, what I could say, like the coders, we use a lot of automated tools for auto-code generating right now, but all the solution is universal. Even if like many years in future we will have a technology which will allow computers to develop something by themselves, it will be very universal, which means it will not be we will not be able to use it everywhere, because even when it comes to trading technology, we have a lot of like bottleneck places where we need to think and decide how we should avoid it, how to rebuild it in a faster way, and etc. So I don't think really that such kind of solution will be able to do better than humans. And also what I think that like 100 years ago, not every person was able to write or read. And I think like in next 100 years, like programming skills will be like writing or reading now, because maybe we will do it in more like usual way, and all people start to make some scripts and simplify their work to automate routine things on their work, on home, and etc. So I think we'll go this way instead of creating some magic artificial intelligence which will bring us to heaven. So I don't think that it's possible for now. Maybe like not in next 100 years for sure.
Maybe Chris has other plans.
We need to see the reality. We need to see if we are using AI today in our businesses, in our solutions that we're developing. In the most simple firm, a broker with his own platform, he's already using AI technologies. Maybe he doesn't know about it. For an example, maybe he's using for the onboarding of the clients to check the documents. The company that is checking the documents maybe is using AI technologies, or maybe they have like an automated chatbot that is based on machine learning and AI technologies. Or maybe the traders that trade with this broker, they are using algos, which again they are using machine learning and they are using AI technologies as well. So it's already there, it's already being used. Now, this AI needs developers to develop it. So the first step, I think, is going to be the replacement of these developers. So there needs to be an AI to be able to code. But for that to happen, you still need a developer to make sure that the code that is being developed, it's valid. And about the bottlenecks that my colleague Alexei mentioned. So I think gradually it's going to replace some parts that are being done now manually, or it's going to help accelerate the tasks of the developers, so they will use it for their own advantage. And it's going to take light years to replace companies as a whole. This is what I
Vitaly, so are there AIs and dev experts?
Yeah. So first of all, we live in this world with AIs, I think, for more than 20 years. So our microchips are designed using AI. And even our software is already designed using AI, because refactoring of the software is actually automated already. Yeah. So if we say that AI is automation of something that the computer can do better than a human, we are already in this world for quite some time. But if we say that AI is something that can learn from its experience, then yeah, I think this is what we will definitely see in the future. Maybe it will not be Google who is experimenting with this, but some other company, smaller one.
Skynet, yes?
Do you have some insider information for us today?
Right. Well, we definitely play with it, and we definitely see the challenges. So you were right saying it's a philosophical question, and I am actually I'm a fan of Nassim Taleb, and using his dictionary, I would say, if humans completely depend on machine, they will become more fragile. So actually they will face some significant hits of something unexpected, and will not be able to respond to that, because everything is now dependent on the algorithm that had some very small bug in the beginning, and no one could actually see that. Yeah, so I think the mixed model where we use AI where it works, where it really improves our effort, and we still let humans decide.
Fair enough. We have some time left, and we have a very exciting panel of experts here, so I think we can do some Q&As. Shall we do some Q&As? Any questions? Yeah, just a second.
Hi, my name is Hormos from ADSS. I have a quick question, very simply, cost of technology and development. Is it going down significantly, as everyone would expect, or is it not going down to develop technology?
Yeah, go ahead.
Yeah, so, it depends. So, easy task costs less, but when it comes to hard tasks, you still need to hire more educated, more skilled professionals. So it's cost higher than it was, because we face a new challenges all the time. So we need to teach people, we need to hire some stars of the coding, and that's why it's become there's more fees and costs. And we start to use a lot of specific tools which make process easier. That's why we could hire some more junior developers to give them easy tasks, and the cost of the development goes down. But in general, I think it's on the same level, because you keep a balance all the time of what you could develop in more, and or to minimize the cost of your development. So something like that.
I think the cost is going up. I think
Not for
as the products get more complex, it goes up. I mean, I think that, and frankly, the labor market has just shown that. You now got people demanding salaries that are sometimes crazy, but they can because they're that good. What you were paying, let's say a few years ago for a good developer at 100 grand, you're probably paying 250 upwards now for someone who's amazing. Someone gave me a phrase which I quite like earlier, which was called a guru. Quite an interesting analogy, but you're going to pay for that, right? So that'll only get passed on somehow, unless you're willing to take a hit for it.
And also, it's difficult to find developers. This is something that we're facing
they're not like
ourselves.
apples that grow on trees.
Yeah, exactly. Yeah. So they may say they know some things, but after a few days, you realize they don't know what they're supposed to know.
But if you think about it from a different standpoint, if there was a yardstick, a benchmark to say the per capita development, or you have the per capita income, the expectation of what is required from developers is going up exponentially with respect to what they're producing, and that's why it looks it's getting more expensive. But the per capita yield per developer in terms of the processing, I think that's going higher because they're more intelligent, more high-level languages, more processing power. So it's really what the benchmark is and what the relativity, framework is for it.
Vitaly?
Yeah, I wanted to add that if you decide not to use existing software but build in-house, software development is expensive. We know that for sure. And don't reinvent the wheels, right? So use existing components and try to integrate them all together. So that's probably the way to go.
I think it also depends on the language you're looking for. If you want to find someone C++, that would be no? Why not? No?
No, because language is for senior developer to learn new language is pretty easy, because programming is not about knowing the language. It's about know how to make algorithms, how to make it all together. So languages, they changes all the time. So anyway, you learn it all the time on your life while you work as a coder. So, but your skills improves when you understand how to get an idea from your customer and to put it in the technology and make it what exactly he wants. So it's not about the language, because language is just an instrument.
Different tasks require different languages. So there are tasks that you can solve with Python, but there are tasks where you need C for low latency.
Yeah, like an instrument. So you just choose proper instrument for the proper
But there also is the fact that there are hundreds of millions of Java developers versus C++ developers. Fact. On the market today. You can walk out and go and get 20 Java developers. to get a really good C++ one. Someone who can actually do it well, that is a difference, I think. But
so to find a really good Pascal developer, would that be difficult, expensive or cheap?
we don't use Pascal, so don't really care.
Okay, any more questions from the audience? Okay, thank you. Thank you very much, gentlemen.
Thank you, guys.
Thank you, everyone.